Hey everyone and welcome back. Ready for another deep dive. Today we're looking at something that's been making waves in the Israeli real estate scene, institutional investments,
Yeah.
especially in these urban renewal projects.
Yeah, it's interesting to see this shift. It used to be mostly individuals or smaller developers in this area, but now you've got these major players coming in. Insurance companies, banks, you name it. They're bringing serious money to the table.
It's a whole different ballgame now, right?
Yeah.
We've got this report for our deep dive that really breaks it all down. Who are these big investors? Where are they putting their money? All that good stuff. Oh, and we've also got some thoughts from Gidon Bar-Sela, the journalist, and he's suggesting there might be a whole new wave of investment strategies coming up. Should be interesting.
Definitely. I'm excited to get into it.
Yeah, me too. So maybe we should start with the why. What's making all these institutions so interested in Israeli real estate right now?
Right. Well, the report we've got points to a few things. It talks about high returns, lower risk compared to other investments, and, the whole social impact angle, helping to address the housing needs and all that. But I think we can dig a little deeper than that.
Okay, yeah, let's break it down. High returns, that's always good, but what makes Israeli real estate stand out compared to other investments?
Yeah.
Like if you were going to put your money in the stock market or bonds, why choose real estate here?
Well, think about it this way. Israel's got a growing population, and most people here want to own their own homes, especially in the cities. But there's not a ton of land for new construction, so that creates a lot of demand, which naturally pushes up property values.
So it's kind of basic economics then.
Exactly.
Not just that Israel's a great place to live, although I'm sure that helps. It's these market forces making real estate a good bet.
Yeah, you got it.
Okay, so then what about the risk side of things? These institutions are usually pretty careful with their money, right? So why are they seeing urban renewal as a safer option? Is it just because of the high demand we talked about?
That's part of it for sure. But there's more to it. With urban renewal, you're not starting from scratch.
Right.
You're working with existing structures, often in great locations, so a lot of the groundwork's already done.
Makes sense.
You've got the infrastructure, the neighborhoods are established, and the government often gives incentives to encourage redevelopment. All that reduces the unknowns.
And the costs, probably.
Yeah, exactly. So there's less risk compared to, say, building something completely new.
So it's kind of like you're taking something that's already valuable and making it even better, polishing it up.
I like that. A good analogy. And this lower risk is especially appealing right now with the economy being so up and down. It makes these investments more stable and reliable, which is what these institutions are looking for.
I can see why they'd be drawn to that, for sure.
And then, of course, there's the whole social impact aspect. Investing in urban renewal helps address the housing shortage, which is a big deal. It gives them a good story to tell their stakeholders, too.
Right, it's like a win-win-win.
Yeah.
Good returns, lower risk, and they're doing something positive. No wonder they're jumping in. Okay, so let's talk about who these big players actually are. The report mentions quite a few.
Oh, yeah. We're seeing major insurance companies like Phoenix, Menorah, Miftakim, Harrell, Migdal, Kalal. And then on the banking side, you've got Hapolim, Lomi, Mizrahi Tefat. These are the big guys. They manage billions in assets.
Wow, that's a lot of firepower. So we've got this perfect storm then. High demand, lower risk, this whole social impact narrative. And now you've got these financial heavyweights getting involved. No wonder things are taking off.
It's an exciting time, that's for sure. But here's a question. Are they all going after the same kinds of projects? Or are we seeing different approaches?
Yeah, that's a good point. I'm curious to see what they're actually doing with all this money. Luckily, our report gives us some clues.
Well, it seems like residential development is a big focus, at least from what I'm seeing in the report. Makes sense, though, right?
Oh, yeah, for sure.
I mean, we already talked about how high the demand for housing is, especially in the cities. So these institutions are basically tapping into that.
Right, right. But are we talking about any kind of residential development, or are there certain trends they're going for?
Good question. It looks like they're leaning towards the higher end of the market.
Oh, really?
Yeah, luxury apartments, high-rises with all the fancy amenities, that kind of thing.
Interesting. So they're catering to a specific kind of buyer then?
Pretty much. The
Yeah.
kind who can afford those higher prices.
Okay. Makes sense from a business perspective, I guess. But what about affordability for the average person?
That's the big question, isn't it? If all these new developments are luxury-focused, it could actually make the problem worse. Prices could go even higher.
Yeah, it's definitely something to watch out for.
Yeah, we'll have to see how it all plays out.
Okay, so the report also mentioned some investments beyond just residential, right? What else are they putting their money into?
Well, there's some activity in the logistics and commercial real estate sectors, probably driven by the whole e-commerce boom. Everyone's shopping online these days, so they need warehouses and distribution centers.
Right, of course.
There's also been some interest in long-term rental projects, which I find interesting.
Oh, why is that?
Well, more and more people are choosing to rent instead of buy these days, so it's a growing market.
Yeah, that's true. So they're not putting all their eggs in one basket then. They're diversifying.
Exactly, which is always a smart move.
Okay, so speaking of new moves, this brings us to Gideon Bar-Sela's article.
Right.
He hinted that banks and insurance companies are trying out some new investment strategies, maybe even something revolutionary.
Yeah, it's definitely got me curious.
Me too. He doesn't go into a lot of detail, but the fact that he's highlighting this new trend suggests they're looking beyond the traditional models.
Yeah, I think so too. It seems like they realize they need to be more innovative to keep up with how fast the market's changing.
Okay, so let's speculate a little here.
Sure.
What kind of new approaches could they be using?
Well, one possibility is that they're getting more directly involved in the development process.
Oh, interesting. Instead of just lending money, they're actually taking part.
Exactly.
Wow.
They might be forming partnerships with real estate companies, taking on management roles, or even getting involved in design and construction.
So they're really getting their hands dirty then.
Pretty much. It would give them more control over the projects, which could mean lower risk and maybe even higher returns.
Okay. I can see how that would appeal to them.
Another possibility is that they're coming up with new financial instruments that are specifically designed for urban renewal.
Okay, but what does that mean exactly? Financial instruments.
Think of something like a REIT, a real estate investment trust, but geared specifically towards urban renewal projects. It would allow smaller investors to buy into these big developments, maybe even focus on specific neighborhoods or types of properties.
So it's like they're opening it up to more people then, not just the big institutions.
Right. It could be a way to attract more funding for these projects, or maybe we'll see crowdfunding platforms popping up that specialize in urban renewal.
Oh, that's interesting. People could invest directly in projects they believe in.
Exactly.
Like impact investing.
Yeah, exactly. And don't forget about technology. That's going to play a big role too.
Oh, yeah, of course. How so?
Well, these institutions could use AI and data analytics to figure out the best urban renewal opportunities. Using algorithms to analyze demographics, infrastructure, all that data to find the areas with the most potential.
Wow, it sounds so futuristic.
It kind of is, but it makes sense, right? Using data to make smarter decisions.
Definitely.
And then there's blockchain technology. That could be huge for this space, too.
Oh, yeah, blockchain. How would that work?
Well, it could be used to create more transparent and secure systems for managing these investments. You could track property ownership, streamline transactions all on a blockchain platform. It would cut down on paperwork, reduce the risk of fraud, make everything more efficient.
It sounds like you could really revolutionize the whole industry.
I think so, but hold on a second. It's important to remember that all investments come with some risk, and real estate is no different.
Right, right.
Even with all these fancy strategies and technology, you can't predict everything. There are always things that can happen that you don't expect.
True. So we shouldn't get too carried away.
Exactly. It's all about finding that balance between being excited about the possibilities and being realistic about the risks.
Okay, so we've talked about the why, the who, the what, and even the how of these institutional investments. But what does it all mean for the average person? How does this trend affect us?
Wow. That's the million-dollar question, isn't it? I mean, we talked about the potential benefits, like more development, revitalizing neighborhoods, all that. But what about affordability? That's the big elephant in the room, right?
Definitely a key concern. And, it's a tough one. It's not a simple answer.
Yeah.
On the one hand, more investment in construction, any kind of construction, could lead to more supply overall.
Right.
And that could theoretically help bring prices down, at least a little.
So you're saying even if these projects are mostly luxury housing, just having more units available could ease the pressure on the market?
It's possible, yeah. But the flip side is that these big developments can really change the character of a neighborhood.
Yeah.
You start getting gentrification, people who've lived there for years get priced out.
Yeah, it's happened in so many cities around the world. It's a real worry. Yeah, and it means we need to be smart about how we do development. It's not just about building more. It's about making sure those new units are actually affordable to a wider range of people.
So mixed income communities, that kind of thing.
Exactly. And this goes back to the whole social impact idea we talked about. If these institutions really want to make a difference, they need to think beyond just meeting the bare minimum requirements for affordable housing in their projects.
Right.
They need to be proactive about creating options that are truly accessible to a range of incomes.
It's about building responsibly, not just for profit, but for the community too.
Yeah.
Which makes me think, we've been focusing a lot on urban renewal, but are we missing opportunities in other parts of the country?
That's a great point. I mean, cities are attractive from an investment standpoint, but what about rural areas? Or the periphery?
Yeah, those places need affordable housing too.
Exactly, and that's where government policies and incentives come in. They can help steer those investments to areas that might not be as profitable on paper, but are still crucial for housing needs.
It's about finding that balance, right?
Yeah.
Economic growth, but also social responsibility.
Exactly. And this is where Gideon Bar-Sela's point about these new investment strategies becomes really interesting. Maybe these innovations aren't just about making more money, but also changing the way we think about real estate investment as a whole.
Yeah, that's an interesting thought. Could these new models actually prioritize affordability, sustainability, community development?
That's what I'm hoping to see. It's definitely something we need to follow closely.
It does feel like we're at a turning point for the Israeli real estate market. All this institutional money coming in could really change the landscape.
Yeah.
But we need to make sure it's for the better for everyone.
Couldn't agree more. This whole deep dive has been about getting people to think critically about these trends and what they mean for the future. There are a lot of questions still out there.
And that's okay. Our goal wasn't to give all the answers, but to get the conversation started.
Yeah, to encourage people to do their own research, stay informed, and get involved.
Because at the end of the day, knowledge is power, right?
Yeah.
Especially with something as complex as real estate.
Absolutely.
So stay curious, keep asking those questions, and don't be afraid to challenge the status quo. The future of Israeli real estate is happening now, and we all have a role to play in shaping it. So that wraps up our deep dive for today. Thanks for joining us, and keep diving deep.